Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, December the 21st, 2022. The Santa rally showed up today, and it actually started in Globex, and then it gained some steam, particularly in the Dow, gained some steam, and then spread. And so it was a basically strong day for upside, and very consistent, and where they kind of were present for much of that session. I can say that it was the greatest volumes, particularly on the openings. It seemed a little light, but still movement was pretty free. And it was two-way, just not easily read. In any case, corrective. So I'm starting here with the S&P. I have been getting suggestions, and I welcome them in the comment sections of how other people are counting this particular move, and all are actually valid still at this point. I did take a look here, and it was a strong suggestion, by the way, from one of the subscribers, that they had moved the 3 down to where I'm placing 5. So the minute 3 is down here, and this would be all or part of minute 4. That is and can be a valid move. I'm waiting for a little bit more. And the reason that I kept mine here is that one thing that I did is when it came time to track this minute 5, I ran the fibs. I'm going to put them back up there. So, and the fibs are just covering wave 3 to wave 4, so we can get an estimate of what we think of wave 5. Now, the most common here in the case of the relationship between a 5th wave and a 3rd wave is often that 5th wave will come in at 0.618 times the length, or 618 of that 3rd wave. And that number would have been 3776. Well, it came down and it hit 50%, pretty much right on the nose. And the structure was totally there. And if you remember, part of that conversation is I was trying to measure it down, and I was talking about, should the market continue to go lower, the 5th is still in play, and et cetera, working with these numbers. I said, but what would become more important rather than the exact fib would be the structure itself. And that is what took over, and that is what took over. So getting 50%, totally acceptable. Structure was perfect. I put my 5 here, and that completed minor wave 1. So we remain within a wave, minor wave 2. So what I'll do next is I'm going to take off those, so that just to demonstrate why I put mine where I did. But let me reemphasize. I'm not saying at 1 second that the 3rd has been disqualified. So for the 3rd to be here and the 5th is yet to come. See, that's the other side of putting the 3rd, a minute 3 here. This is minute 4. We still have a minute 5th wave to come, and then that will be followed by a minor wave 2. So by putting it down there, suggesting that minor wave 1 is not complete, we still have one more downside, then a stronger rally. And in a time factor, I thought, okay, that could be very possible, because we still could drop down, and by between tomorrow and next week, and still have a start of a new rally off of that anticipated low. So I'm leaving it here. We still have additional upside to do. So I'm going to my next fib. And we're back to retracements now, because I'm just going to be looking at the retracements for minor wave 2. So therefore, we go to the top of minor wave 1. That's where it started, all the way up there, and I go to the bottom of minor wave 1, and that's right here. So normally what we would look at a minimum, that a corrective bounce after a 1st wave, or even the 3rd wave, would be, as a minimum, we're looking for 0.382. Right now in the S&P, that's 39.47. So 39.50, we'll call it. And structure allows. It could be an A, a B, and now we're up in that C wave. We've got a little bit of junk here, but it still could be. It's hard for me to count it. And even if I open it up, it's still kind of hard to count it because it would be a very large C wave. And that's possible. That's A, that's B, and then a 1, 2, 3, 4. All right. A, B, 1, 2, 3, 4. With there's still a fifth wave to come to the upside to complete. So, and that is a strong possibility. Still being 3 waves, difficult as it is, or as another suggestion to me was made that we're finishing up wave A of minor 2, and then we're going to do a B wave decline and an additional rally. And that rally then could very well get us up to 3950 to 4,000. Right, 3991 is 50%. 618 is 4,036. Are these possible? Yeah, they are in a minor wave 2 scenario. And then what comes, we would know, would be a fairly strong downdraft. There's also discussion coming my way, particularly here in the S&P, that we're in that larger primary B wave. So in other words, the primary A is the wave that completed at S&P 3502, that low back in November, or was it October? Right there, we're going to be in October the 13th. So the October the 13th low would be primary wave A, and this is all building inside of a primary B wave. Is it possible? Yes. I'm not sure how to count it, but it is possible. So because I'd have to go down to this 4-hour, and we'd be looking at this saying, well, what is all this then? In terms of how much higher can this whole market drive itself? So within this primary B wave, how are we counting this? As the A wave and this is the B wave? I don't know. This could be A, B, and then a C. Right, we got 1, 2, 3, 4, 5, and that 5 actually could go down to there. So there's a couple of ways to really look at this before we can determine where it's going. I'm leaving mine, my preferred count remains for intermediate wave 2 to be complete at 4180. We're in the beginning stages of intermediate third. We've done minor wave 1. And we're still in the process of minor wave 2. For tomorrow, I believe that we need to consider and continue to anticipate the possibility that we will run up to 3950. And its way is going to be the hourly 200 at 3925. So we could get stuck right there. The count basically leaves open that this is a 4. Maybe we get that 5 going and we get up into that area. And once that's done, then we'll see about putting in a 5 and then dropping. Moving averages, the 50 did a little turn higher. The 20, the 4, and the 8 are all turning higher. And the 200's pretty flat. Kind of getting more flat from slight downward slope there, but getting very flat. Over in the NASDAQ, it pretty much is the same story. And that it also got itself up to that first Fibonacci resistance for a minor wave 2. And that came in at 11,349. And we got as high as 11,389. And so the strength was there, and that's good. It's something that I was not surprised by. I was expecting and continue to expect for some more. Now the counts are pretty much the same. If I go A, B, and I can go 1, 2, and then the rest is a 3 up to here, or I've got A, B, C, A, where I'm going to get a B in here. I'm not sure. So even that this was the B because it was sort of, this is with the triangle. And then 1, 2, 3, 4, 5. And that's likely how I'm going to do it. A, B, C, A, and then we get a B, and then it's a 5 waves up for a C, and we may end up here to here. We still have that 5th wave to go. And but neither are going to surprise me. We were down 11,043, and to get up to 11,500 is just putting 500 points back on from dropping 1,000. Pretty standard, I would guess, huh? Almost 40% retracement versus dropping, and then we drop again. So everything gets to take a breather. Everything gets to kind of change around and go in the other direction. Now, one thing that I'm not latching on to is that suddenly, people are getting bullish. Bonds are, finished higher. The dollar finished higher. It's like, folks, this is all year-end stuff. And is it worth, if you had the opportunity to either via options or just have the stock, to be buying the stock around 130 to 132? Yeah, we got a $3 move today. It's nice. If you're a day trader or a very short-term swing trader, good trade. And there should be more. So in those respects, there is some good trading to do, and you're doing it from the long side because that's the direction that the market is kind of going at the moment. So there's a lot of things that carry that forward, and the momentum can get going, and then it's good because there will be more volume. There'll be more people trading it, and that's kind of what you also want to see. So that should continue for right now. The selling with a purpose, as I'm calling it, will return. So again, I put this into the bucket of year-end posturing, year-end getting positions in line with how they want to complete the year. And many times as a trader, maybe you think you've made too much money. So you're going to throw a couple of tax losses in there. You got something going on, or you just need to get out of a position because it's gone down too far and you don't want to hold the long, or it's gone up too far and I don't want to carry the short. So positions get closed out, losses get taken in this tax year versus carrying it out until next year. So we got to allow for all of that. And in the meantime, just try to get in there during the day and get some stuff done. So for tomorrow, I expect pretty much the same. What we also have coming in tomorrow are some numbers. So we have GDP, jobless claims, both at 8:30 Eastern, and that's about it. And again, on Friday morning, we have durable goods, personal income and outlays, and those are at 8:30 Eastern, and then we have new home sales at 10 a.m. Now, all of the home sales, and today existing home sales, and on Tuesday was housing starts, not really seeing a reaction to those. I don't know if there was actually a reaction because of the consumer confidence, but a lot of buyers stepped in. And I just believe that it was because that was when the orders were going to get executed, and it made sense just to kind of do it while we're moving. And so they did. Now, again, tomorrow, GDP and jobless claims both at 8:30 a.m. Eastern. I suspect I'm not really looking for grand improvements there, although we have been seeing slight improvements coming into this number. We did see some slight improvements to the CPI numbers. And so again, but I do believe we'll get a market reaction. So that's tomorrow morning before the open. And it could be that we're all done and we start to head back down again. And from there, folks, let's not forget that we're moving into Friday, and Friday is an expiration, not as big as last Friday, but it's still an expiration. And all of the underlying companies in all of these indexes are options. They have options that trade. So there'll be a lot going on. All right, I'm going to finish it up right there. Our next update will be on Thursday, December the 22nd.